I'll hand over to our moderator from Brunei Darussalam, Mr. Edzwan Adanan. Edzwan is the Senior Investment Manager of Darussalam Assets, Brunei Darussalam, who will be introducing our speakers and leading us through this conversation. Hi, Edzwan. Thank you so much for joining us.
Hi, Jenny. How are you?
I'm great. Thank you. Looking forward to this session.
All right. Thank you very much, Jenny. Okay. Assalamualaikum and good afternoon, everyone. As a moderator, I'm not going to be as animated as my colleague Alan this morning, whose session I very much enjoyed. For the audience who are still with us for the last panel discussion, thank you. Before we start our session, I would like to briefly introduce the four gentlemen who will share the pearls of wisdom with us this afternoon. We have with us Mr. Myungsoo Song. Mr. Myungsoo, I hope that you're there already. From South Korea, the founder and CEO of Penn Ventures and former managing director of Plug and Play Korea. He brings with him 15 years of experience in the Pan-Asia insurance and fintech industry. We also have with us Mr. Tawan Boonyawat from Thailand. Mr. Tawan started his VC career when he was the IT director at ROK Asset Development, where he initiated and spearheaded many technology and innovation foundation projects. He later joined InTouch Holdings as venture capital manager and principal of Invent. And since 2018, he's the CEO of Moonshoot Venture Capital, which focuses primarily on deep tech and industrial tech investment. He also currently serves as the CEO of Megawatt Co., a company that provides renewable energy and engineering solutions in Southeast Asia. I would also like to welcome our panelists from Malaysia, Mr. Shahrul from Venture Technology Development Corporation, MTDC Malaysia. MTDC is a wholly owned company of Khazanah National Berhad and is established to encourage technology acquisition activities and to develop technology-based companies. MTDC provides integrated support services for technopreneurs where they are provided funding and assistance. And lastly, to round this off, I would like to introduce Mr. Edward Tay from Sistema Asia Capital, Singapore. Edward is the CEO of Sistema Asia Capital. Among many things, Edward is also the founder of Asia Sustainability Forum, a platform for stakeholders to build strong connection and share thought leadership on sustainability efforts. Mr. Edward Tay regularly speaks in tech forums and is judged in startup competitions such as Tech Blazer, Slingshot, Lee Kuan Yew Global Business Case Competition, and the BRICS Business Competition. Welcome, gentlemen. This is very exciting. There is a wealth of experience in this panel. I want to try and make this segment as easygoing as possible since this is the last segment of the day. And let's try and pretty much tie in everything that was discussed during the day as well. I know I've made a very brief introduction, but I think it would be a disservice if I didn't allow yourself to perhaps share your own journey as an investor in the VC space. Can I start with you, Mr. Myungsoo? You're on mute, by the way.
Okay, got it. Hi, guys. Thank you for your time and introduction. My name is Myungsoo Song. I'm the CEO and founder of the Penn Ventures. Actually, I'm not a typical VC guy from the investment side. As you know, that Edzwan introduced, I was in the insurance industry in Seoul, Hong Kong, and Singapore. Over there, I have come to realize that a lot of insurance company invest on the insurtech from 2015 to 2020, something like that. And then not only on the insurtech and fintech side, as a financial investor, insurance companies are focusing on kind of a lot of the risk investment. They increase their portion of that, even they are very the conservative investors. So at the time when I in Singapore, I thought that okay, it's time to move to that sector. So I had the chance to be a kind of founding member of the Plug and Play Korea, and then during last 2 years, I did that to found to try to get the role. And also I started my own venture company, Penn Ventures, and also Penn Initiative, which is the education company for the innovation, and also ESG to the corporate side. Yeah, that's from my journey today.
All right, thank you, Mr. Tawan.
Hi, okay, I'm entering into venture capital business 9 years ago. Actually, and my first job is not close to venture capital at all because I'm an engineer, right? At my age, okay, I have to be an engineer or doctor or accountant. And I love to invest. And then I have an opportunity 9 years ago to join Invent. And I love this business since then, and I still stick to it. So after that, I think I love to open my fund to invest in what I believe in. So that is my story for now.
All right, great. Thank you. Mr. Edward?
Yeah, thank you very much. Similar to Mr. Tawan, I started being an engineer, right? But I have advanced through my corporate ladder, working in big tech companies such as IBM's, and also headed up as a regional country head in British Telecoms, managing huge portfolios very early in my career. And I've also started angel investments as early about year 2000s, where everything that was tech was practically non-existent. And even global warming is not something that people really readily understand as compared to now. So fast forward right now, the group that I actually am serving right now, I'm the Asia Pacific CEO for Sistema Asia. We are actually one of the top investment houses globally. We are listed in London Stock Exchange. And also within my portfolios, we were very lucky to have three unicorns just for this year in areas of food techs and this e-commerce. So looking forward to sharing some of my experience and also learning from fellow panelists. Thank you.
All right, thank you. Can I pass the ball to you now, Mr. Sharo?
Hi, I'm Sharo here from MTDC. Firstly, I'm not an engineer. I used to be CFO in a few companies, listed companies and startup. So when I joined MTDC, I joined as CFO. But at the same time, I also sit in a lot of. I'm also a committee members of technical committee for approving the fund. So 5 years ago, I was like brought in to join the investment department. Yeah, it's like a new experience, but I'm happy to share whatever experience that I have for the last 5 years or maybe before that as CFO as well.
Okay, great. Thank you very much, gentlemen. For those tuning into the panel discussion, if you have any questions to ask the panelists, please post your questions in the chat box. So just to get things started. So I'm a football fan. I'm a proud Man United fan. The current season has been a little bit topsy-turvy. Nonetheless, I cannot deny greatness. And I have to admit, I'm currently an admirer of Jurgen Klopp. So for Liverpool fans, the evolution of Liverpool since he became manager has been phenomenal. In any case, there were two things that caught my eye during his current tenure. The first was a quote, so pardon my language a little bit. So he said, to have a complete idiot with you just because he can kick the ball a little bit better is a little bit annoying. And the second was when he wanted to sign the Dutch midfielder, Jorginho Wijnaldum, in 2016. He invited him to his home for dinner and asked him about his last holiday instead of talking about football. From the coach's perspective, a dozen nationalities play in his team. Such heterogeneous teams are increasingly common in companies as well, and they can only succeed if they have a shared goal with a strong intercultural competence. For you gentlemen, what is your approach when investing in a company? And based on your experience, what do you feel are the top 3 things you consider when assessing a startup? Can I start with you, Myungsoo?
Okay, got it. Actually, well, a lot of that the gentleman over here has a different view because but a lot of things would be in common things. So I just want to mention about just one thing, but I'm gonna split into 3 directions. So I think that the team is the most important thing, and especially the founders. So founder, I try to find out whether he has 3 characters or not. First of all, well, whether he's a doer or not. Yeah, actually, well, a lot of that the startups here in Korea, most of them are CTOs, but they are just seeing a CTO real, but they are doing a CEO role. So which means that he should focus on kind of that the technical area, but somebody else should be a kind of a sales or something like that. So to survive, I think that basically the sales, whether it is in the corporate side or to make a network, is the most important thing. But for the sales, the most important character is whether he's a doer or not. And second of all, whether he's a giver, which means I'm talking about the governance. For example, there are 3 common, founders, but CEO is kind of the important guys, and he's a strategist. There is a CTO. CTO is more important than sometimes, but in that case, if a CEO has 80% of a share and the CTO has a 20% of a share of the stock, is it fair? No. So the founders should has a kind of that the founders has to have a kind of the fair system of the something like that. To do that, I think that the first the CEO founder should have the giving mind. That's the most important thing. And third one is that okay, so each of the that the venture capital company has a different appetite. So for me, for example, my appetite is for the clean tech and edutech and the digital healthcare. But I think that the important thing is that as an investor, we see that whether the market is big or not. So the startup would go not only for the domestic, whether they would go for the expand to the global market or something like that. So the third important thing is that he or she founder is big or not. Big means big vision. He's going for the big market, something like that. Yeah, that's the 3 points that I'm having when I value. If I can value the founder's characters. Yeah, that's the point.
Okay. What about you, Tawan? Do you have a similar approach to Myungsoo?
Yes, we have the similar approach. But when I look into the startup, I want to know why they create this product or service. What they want to do in that business is the first thing that I want to do. And the second thing is about the co-founder. That's very important to me because when I treat the startup, I treat it startup as a small corporate, right? So the founder, they have to have a complete the role as a corporate. Like, okay, you have a CEO role, you have a COO, you have HR. So exactly that you have to have each position on that. But it means that the founder have to do all this function with there, and also look into the entrepreneurship. So I spend a lot of time with the founder. I've showed tons of questions. Hello. Did you hear me?
Okay. We seem to be facing a little bit of technical difficulties with Tawan here.
Hello. Can you hear me?
Hello, Tawan. Yes, we can hear you now. Yeah. Go ahead.
Okay. Yeah. Okay. So I also look into their entrepreneurship. Okay. I throw a lot of questions to them, and I want to ask what they do when they don't have the fun. I want to know how they treat people. How do they act to their business? Okay, that's what I want to know about them. And the last thing is about the business model. Okay, how can they penetrate into the industry? That's what I look into. The top 3 things that I look into the startup.
Great, thank you. Can I pass the ball on to you, Mr. Edward? Or do you have a different approach to this? And maybe if you could illustrate this via your success stories and your best learnings in your journey so far.
Yeah, sure. I think more or less we are looking almost at the same categories, but maybe I'll just like to highlight a little bit of difference, because I think in the area of investments, there are such things as a seed or early stage, whereby the companies are generally very small. They are having a revenue slightly under $1 million USDs, possibly less than 50 people. Their products may be ready or maybe not ready, and they are still undergoing, let's say, the proof of concept or just testing out with the pilots. So this is one categories. The other categories is literally what we call the Series A, B, C categories. Those means that they have already established products, established teams. They have already started commercialization. So maybe I'll just share a little bit of the differences between those. So for those who are at the early and the seed stage, I think the more important one is really about the people, right? We place a lot of emphasis on the people itself. So number one, their educations, right? Professionals, where do they graduate from, right? What are their professional accreditations? Because typically these will give us a good glimpse of whether the team can make it or not. And secondly, also very important as part of these people is their personalities, right? We tend to want to have a mixture of co-founders, right, across different genders, right? We hope to have both male and females, right? Because in the consumer field itself, 50% is actually occupied by one gender itself, and it doesn't make sense for all the men to be building a products that have 50% women using this.
That's very true.
And also for some of the solutions, especially for those who are the B2B enterprise one, for example, who are more geared towards heavy machineries or aviations, right, or even tourism, it'll be good to have even multi-generational co-founders. For example, right, you may have like tech CTOs in the 20s or 30s, and possibly somebody in the 40s or 50s who have been in the industry as a business, in the business role itself. For example, right, running mines or being a factory managers, for examples. So we would value highly such cross language, cross religion, cross cultural, as well as cross generational experiences in such early setups, because people would predominantly be around 60 to 70% of what is required at that early stage itself. So that's one big difference. For the bigger ones, those who are the Series A, B onwards, those who already have at least about 1 million revenues, right? 20 to 30 guys up and above. That's likelihood. We're going to focus on two things. One is the products, right? What are they selling? What is the price point? What is the unit price, right? Does it make sense for this market or the market that they expect to go, right? So just to share about this itself, we have one unicorn under our portfolio itself. This company name is called Infra Market. You can check out this company. This is a very, very young company, slightly under 4.5 years old. When we actually went in, they are like under 50 guys in total, right? Right now, right, to date, I think about 2 months ago, they were hitting revenue about $1 billion, $1 billion US, right? And they are presently worth about close to about 2.5 billion USD, right? Based on the last fundraisings. So what actually typifies such company is their product is actually an e-commerce platform. It is a marketplace, but they are focusing on the built environments, right? For those who are not familiar with this term, built environments is typically a marketplace for architects, for constructions, for property developers to come and buy and sell whatever they have, right? So some of the things could be like even nuts and bolts, or even scotch tapes, or even cements, right? Big ticket items. So interestingly, in a very short period of time, because their business model is already tested, in terms of e-commerce, right? E-commerce has been with us for the longest time, since Amazon's, right? We have eBay's, even in China's, and then everywhere else. And right close over here itself, we also have like Lazada's and Shopee's, right? So the business model is already done. So the product is already done. So what we do is actually we deep dive into that company itself, and we run through each and every processes that they have. How the customers, how the end users are actually using the UI UX, right? How do they actually comes into the mobile or into the web to access it? How does it feel like? How do the end users actually comes in to decide to choose what cement, what brick to buy, right? As compared to other platforms itself. How do they actually place the payment, and how fast will they get the products? So we will dissect the whole processes from the source all the way to the end, and make it so seamless, so that for the guys, for the architects or the procurement directors, or there are also many small project managers who just come in. They find it is so easy to use, to compare prices, right? To have a list of technical specification, which is not easy to actually navigate, because we're not buying a simple furniture over here. We are buying tons and tons of hardwares and materials, and in the engineering and the construction field itself, these are only meant for people who are in that field itself, right? Many of us who are not trained in that field itself would find ourselves totally lost. But for them, this is actually a nirvana. They find that they have so many informations in their hand, and they find that it's a lot more easier for them to actually connect with each other. So I'm just using this as an example to show that, you know, process and the products are really important in this pathway.
Okay, great. Thank you. Thank you, Mr. Tay. Sharol, do you have anything else to add to that note?
Yeah, I think when we invest, usually we will look into three things: the founder, the person, the product, and the market. So we as a government agency, our mandate is to promote the technology, promote the adoption of technology, the commercialization part. So usually the first thing we look is at the technology. What kind of it's not like the new product. It has to be a commercialization of new product, and we are looking also at how the product will solve the pain in the market, and what was the solution, and if you have IP. And then at the same time, we are looking also at the person. As I think everybody has the same idea that if the founder does not look very convincing, then usually we don't invest. And then we look at the team as well. How diverse is the team? But I think most importantly is we look at the market. If you have a good product but you don't have the ready market, then we deem that this is not a good investment, because at the same time we are looking at the return as well. So if the market is not there, then we usually pass it.
That's a very good point, actually, Mr. Sharol, because the thing is that at the end of the day, we have to be very practical about it. When we put money at risk, we do want to generate our returns as well. So if I go to the next point that I was going to talk about, so I just to give a little bit of a preamble, one of my favorite books is actually by Stephen Covey, The 7 Habits of Highly Effective People. And one of the 7 habits mentioned in the book is sharpening your saw. So can we start with you, Sharol? What tools should we sharpen in order for us to monitor, identify whether there is an issue with the company, and then interject where is required?
We don't really have specific tools, but usually we ask the company. We will usually have a frequent visit to the company, discuss with the owner their plan, and at the same time we also ask for the monthly or at least quarterly report, look at the figures, and yeah, we have all this basically financial analysis on the performance of the company. And because I mean at MTDC we are not only doing the investment, we also have the we call it value-added services, where we also help with the networking. We bring them to, I mean, we open up the market for them if they find it difficult to get the market. And we are also close to the government ministry. So we try to assist them as much as possible if there is if the performance is not as what we expect.
Right, understood. Now, what about you, Mr. Tawan? Do you have anything that would govern or curate the way you do your investments? Do you have investment policies and so forth? Maybe you can share with us in general.
So you mean the way that the tool that I use to monitor my investment, is that correct? That's what you...
Yes.
Okay. I'll start with the annual plan. Okay, at the end of the year, they have to propose the plan, like a business plan, annual business plan for us to approve. Okay, after that, I have a quarterly meeting. Okay, to monitor them. Okay, but actually, I still have a monthly meeting with them. At least I have a call. Okay, to know that they are still doing well, or do they have any problem, or they need help support from us to do. So yeah, weekly, quarterly, monthly is what I used to monitor my startup, okay, and make them headache right now.
Okay. From the sound of it, having close contact, having personal relationships seems to be one of the most dominant things that is there. Maybe, anyone can just jump in to actually go and talk about this, but, how has COVID changed this approach? Because from the sound of it, everyone needs to be connected. Everyone needs to see what, how things are doing to sort of like corroborate what the investments are, what the plans are, and to stress test and do a sanity check on it. So maybe we can start with you, Mr. Edward, if you have any points to share on this.
Yeah, definitely. So I think the pandemics have actually thrown a wild spanners on everyone, including the entrepreneurs. Luckily for me, I guess, because we have always been in the tech field, so we are really very used to using a lot of telecommunication tools, using a lot of social medias. Prior to the pandemics, I have at one time I spent about 9 different social medias, right, for me to connect with our investors.
Sorry, did you say 9 social media platforms?
Yes,
9,
yes.
Wow.
Believe it or not, I'm not the most craziest one, right? I have 10 guys who are connected to 13. I have no idea where some of these is. So we will use Line to connect with Japan. We use Kakos to connect with Koreas, and then we have like the usuals, right? The WhatsApps, Facebooks, LinkedIn, and also the Chinese ones. They are using like WeChats. And for those who are into the blockchains and the cryptos, they'll be using like Telegram and Signals. This is just scratching the surface, right? In the tech field itself, there's always a communities who are moving one from another to another to another, and it is our job, right, as the investors of tech funds, to be keeping ahead. Otherwise, we will lose track of the entrepreneurs. We will not be able to know what is actually being discussed. So, to your point, I think this pandemic over the last 18 months is somewhat very interesting, because it actually allows companies like us who are already digitally connected, right, within ourselves. We are part of a conglomerate groups, right? I have colleagues in New York, in NASDAQ, in London, Moscow, Tel Aviv, right, India, right, and we have to go on calls literally every day, just to allow ourselves to keep track of what is happening in a certain domains. So I think beyond just emails itself, because emails are really good to have a lot of information, especially spreadsheets, and we engineers, we love emails because it's we can read very fast and we can
wow, yeah,
right. Okay. And maybe even somebody with CFO background like Mr. Shaharus can really look at some of the financial in the Excel spreadsheet really quickly. So I think it is good for some medium. But what is not good is the email do not allows us to connect with people thoughts over here itself. Because what is in the investment deck is only that 20 pages, 30 pages. What it did not tell us is why and how did they arrive at that unit price? Why and how did they decide to expand to perhaps to Malaysia and Thailand instead of perhaps Thailand or Brunei? Okay, so these are the thought process that is virtually been lost. I guess short of being face to face, in the past pre-COVID, we will send our investment managers, investment directors, they'll fly everywhere. They will literally sit down 24 hours, 48 hours in the portfolio companies and run through all the accounts, run through all the paperwork. But also more important is really have a genuine discussion with the co-founders. What is going through their mind? Why do they think that this is important and that is not important? So Stephen Covey is also one of my favorite management gurus. So just continue on that itself. There was a book called First Thing First. I think among the founders, we really appreciate those who actually are able to take all these different diverse data, all these new developments, to the geopolitical tensions that is currently happening, to even all the pandemics and the changes, right, that is affecting their staff, their employees, and really decide what is the most important thing for them to do first. First thing first. This is a very, very difficult skills. This one comes from a lot of experiences. Even professional like us, we also make a lot of mistakes. I think this is where a lot of sharing, either with investors like us or even with the peers, will really comes in, because they can then really share the best practices and help each others, navigate this period of time, especially during this period of huge uncertainty.
Right. I do want to try and make sure that the audience is also engaged as well. So I'm going to go segue a little bit and ask some questions that the audience has also asked. So there is a question from Dina Helmi. So her question is, as investors, fund providers, funding assistance like a government or private agency, what do you think is the right or minimum size of fund to kickstart the startup or business? Can I turn the floor to you, Myungsoo?
Yeah, I don't get that the exact the meaning of the right minimum size of fund to kickstart a startup business. Are you asking for the it depends on actually. Well, are you asking? Can I ask that you are asking for the fund size or check size? Can I ask?
I think she's asking for the minimum size for a fund to kickstart the startup business. Like what would be
startup
what you
business.
would consider? Yeah, what would you
the
consider
fund
as
size.
the minimum amount? Yeah, the fund size.
Well, it depends on well, frankly speaking, based on my experience, I started my the first the fund size I made with my friend was 500K, yeah, so US dollar. So actually, well, 7 of us made the size of 500K, and there was some of them pay 100K or something like that. So, but we made quite a good investment with the seed money. We made, as I remember, we invest on the 8 startups. Not like I cannot say it's a kind of startups. Actually, we just kind of that the French. Some of them are just in franchise business, the rent or something like that. So it depends on. But it depends on what kind of the startups and what kind of the stage of the startups you are targeting. For example, the big boys in Sequoia, and they having different stories, and we are adding for the even for the small size of the accelerate or something like that. As I said, I just made the pen benches. We are targeting the pre-A size that the startups, and we are trying to make fund the next year $30 million one, yeah, US dollars of fund, small fund. We're gonna focus on kind of the here in Korea clean tech and very small sizes, that the edutech companies over here. So 30 million, we are targeting around, maybe check size it would be like the 300K, maybe something like that. So we're gonna invest on try to make the 100 startups portfolio within 2 or 3 years. So that's our size, but it depends on how many. Bigger is better. Bigger is better, but I think that it depends on how
sometimes
how much
when you're too big, it's hard too. What are you gonna do with the money?
Yeah. But if you prove yourself in the market as an investor, for example, there's fund of fund, big guys, and there's a later stage investors. If you prove yourself that you have the good appetite to see the early stage startups, and then you can get that kind of the credit later on stage, and then you can get make a bigger the size of fund, I think. Yeah.
Okay, great. There's a common question that I can see in the chat box as well. It's regarding about pain points. Okay, so what would you consider as the normal pain points as investors and also VC funds run into? So can I pass the ball to both Tawan and Sharul? Maybe we can have Tawan answer first, and then after that, Sharul maybe can add on to the response as well. So what would be, when you look at an investment, what are the usual pain points that the VC fund usually runs into, and then how do you try and help them out?
Wow. Okay, the pain point in a startup, or I'm not sure.
So in the startup, in all manner of sizes. I mean, because the thing is, there's usually some common factors, but there's usually some idiosyncratic risk or idiosyncratic factors within a company itself. But based on your experience of looking at things, what would be the normal pain points that you'd see?
So for me, the pain point in the startup is not about the development plan or the product development plan. Most of them are in like a back office stuff, like sometimes they don't know about the regulation. Okay, sometimes they don't have experience, much more experience about the accounting. So that's why they always feel up like they have to pay the fine, or they have to have an issue, legal issue in that. So for me, it's about the back office stuff instead of about the development plan or whatever. Yeah.
Okay. What about you, Mr. Sharo? Do you have anything to add to that? From the sound of it, because you've got a CFO background, so this might be something up your alley as well.
Okay. If you look at from VC perspective, the pain point is to find the right company, to find the right investment. But I think I agree with Mr. Tawan. The problem with SME especially is they tend to not invest in admin staff. They usually take a clerk rather than a proper CFO. Then imagine one day you wake up and you get a letter from
the bank.
I mean, some of the companies I sit as a director, then suddenly you wake up and you get summon letter from, we have this in Malaysia, we have Employee Provident Fund, which is like monthly contribution by the company, and this is compulsory. Then yeah, I mean, how the governance in the SME is a bit lacking most of the time. I think that is main problem, and of course, when definitely if they don't have CFO, they have problem in providing us with the monthly report, monthly accounts, and then the manage. Even I see that sometimes when they come to the pricing, they don't include a lot of things. Then a lot of things is mispriced. I mean, the SME should not just concentrate on marketing and technology. At the same time, they have to look at the back office. That's what I think the pain point in our investing.
Okay, understood.
May I add one thing?
Yeah, sure. Please, Tawan, go ahead.
Okay. So one thing that I always see as a common risks, okay, because a startup always too optimistic about their revenue, and they don't have the backup plan for that. Okay, they have a poor cash management. So that's the one thing that I think that's common risks in the company, in the startup.
Okay, that's very true. And I think based on the experience of the four of you have, you probably see this all the time as well. So I'm going to ask the questions from the chat box a little bit later on, because I do want to try and make sure that we do focus on innovation as well, because that seems to be one of the core messages and one of the things that has been mentioned time and time again during the whole forum for today. So what I wanted to try and also say is, the past 10 years we've seen a transformation in the digital space. That's been phenomenal in terms of evolution of, Mr. Edward mentioned about, having 14, 15 different apps for communication and so forth. But I don't really want to go necessarily into specifics, but digitization has definitely changed the way we interact. I mean, I can't imagine having COVID in a lockdown and not being able to communicate. I mean, the fact that we've got telecommunications that allow us to actually go and talk. But we do try to avoid too much of the toxic stuff on Twitter and all the cancel culture. But but I do want to go and ask. Maybe we'll start with Mr. Tay, and then after that, Myungsoo, if you can also jump in as well. So, how has the digital revolution changed your approach, and how important is government support in this endeavor? So, Mr. Edward, maybe if you want to kickstart the conversation first.
Yeah, thanks. In our opinion, actually, on the last 2 years, 3 key areas are actually very big focus. Digitization, for sure, that has always been around, at least in Southeast Asia. Southeast Asia, since actually about 2010, has already have a Southeast Asia smart cities framework itself, whereby we talked about connecting all the Southeast Asia's economy and allowing everybody to make money digitally. But I guess three things has actually arise because of this pandemic. Number one is MedTech, right? Medical technologies. Given the current pandemics, the level of innovations, the level of focus in this, for example, in areas of vaccines or even in areas of tools to help people to communicate and learn better, to help elderlies and young children actually learn better during these pandemics, are all very, very key tools. So we see a proliferation of EdTechs, education technologies applied in not only the schools, but also in hospitals, also in our communities. So this is one very key areas. Another key areas that we do see is, recently in Glasgow's COP26 have just ended, and the world has undergo a big shakeup, right? At least among all the governments leaders itself. Never once are we also fully united behind the fact that our world is actually heating up, and we need to do a lot of things. So sustainability, clean tech, is going to be featured heavily in many of the investors' portfolios itself. Not only that itself, right? There are also many of the up and coming requirements from all the various companies, companies like us who are already listed at the different stock exchanges globally, on higher significant on ESGs. This ESGs is environmental, social, and the governance, right? So they are placing a lot of emphasis. They are not encouraging us. They are telling us investors, to actually look for companies who are helping to save the world, who are helping to save social problems, who are having a better corporate governance. So I think all these developments will ultimately help to push many of the innovations, especially for many of the audience out there who have an ideas or products or already working in companies who are in the green economies or circular economies, or even have a products that simply helps to raise the level of sustainability.
Okay, Myungsoo, do you have anything to add to that?
Yeah, I totally agree with Edward's idea, but I want to approach with it different that perspectives. Actually, what digitalization is, through a lot of digitalization, I think that it's really good timing for the youngers or olders to start up their own business. What I'm saying is that tons of the SaaS program, software as a service. So nowadays, if they want to start a business, it's really easy to start a business. They don't have to make that worry about to making a payment system by themselves, or US or your marketplaces by themselves. There's already a lot of them in the market. They're providing tons of solutions already. So it's really good timing for that. Through digitalization and the SaaS program, and I think that it's a really good chance for the entrepreneurs to make a business in an easy way. And also the other perspective is that innovation is driven by the startups, but also driven by the big corporates. But still, big corporates need to be digitalized again and again in an advanced way. In that sense, actually, what big corporates has a lot of resources, but they have that they cannot move fast. So that's why there's chances for the startups that not only defeating and competing with the big corporate, but also to co-work as a client, as a partner, to co-work with big corporate. We are as financial investors trying to find the interest and the financial margins, but we try to that introduce as much as CVCs also, which also that provide the startups a kind of the strategic the bond with as a client, as a partner. So that will boost up the speed of the digitalization of the big corporate. And I think that the last question you asked is that the role of the governance. It's really, really important. I think that some people say that here in Korea, the role of the government, they provide fund largely to the private sector. They're making a step-by-step accelerating program. It helps a lot. There's a good point and bad point also, but up to the certain level, the supporting from the government will increase the survival rate of the startups. Yeah, even here in Korea, a lot of even Korea government like, this in kind of the program provides also, that the chances for the startup to go overseas, to expand their market to the overseas like that. So I think that anyhow, that the role of the government for the startup industry is really important.
Okay, I do have to apologize, gentlemen. The 45 minutes has flew by so fast. We don't have any extra time, in footballing terms, but I've really very much enjoyed the conversation with the four of you. I wish we had another hour or so, but I do have to apologize again. I know there's a lot of questions there in the chat box as well, but I think I have to, I can see already Jenny, she's making her face already, so I have to pass the floor back to Jenny. Again, thank you very much, Myungsoo, Tawan, Cheryl, and Edward. Please do keep in touch.
Thank
and
you
if
very much.
anyone has any questions to them, please let the organizers know, and then they can forward the questions to the gentlemen themselves as well. Jenny, the floor is now yours.